Today I'm going to talk about 5 of my favorite dividend paying stocks and help you guys reach that ever elusive dream of having passive income. So stick around and I'll share these 5 stocks that I really love. Good morning. My name is Adam Kahn and I'm the Rational Investor. Before I get into the 5 stocks I'm going to discuss today, do me a favor, hit that subscribe button, smash the like button, chime in, tell me why you disagree, or tell me what stocks you guys like, whether they have dividends or not. I really like the stock market. I think that this week's drop actually creates a good buying opportunity. So I picked up a little myself. I'm also going to put a couple links in the description for ways to open an account at SoFi. If you deposit $10 or more, they're going to give you a free $25. The other thing it does is it gives an account that my son and I opened together a little bit of a gift. He gets really excited about it. He's about to turn 13 years old. And I love teaching him about investing. I think it's pretty cool to get him started this young. So I'm going to work backwards because otherwise I'm going to talk about my favorite one first, and I'll wait till the end to talk about my favorite stock and why I like it so much. But really, I like all 5 of these. I have them myself. They're in my portfolio. I try not to trade around them. I actually just own them for the dividend return. And partially over time, I've been slowly moving out of real estate into dividend stocks because I like how much more passive they are. I don't have to worry about if an air conditioner breaks or if a tenant leaves after some time and finding a new tenant, and things that I never really thought much about previously. But as I'm getting older, it's much easier just to wake up and go to sleep and not worry so much. Now, the one thing to be aware of is dividends are not guaranteed. If a company goes through a rough patch, they could lower them, they could cut them out completely. All sorts of things can happen, and every type of investment has risk. So you have to keep that in mind when you make these decisions. Also, I'm not a financial advisor. You guys need to do your own research. Just a guy on YouTube. I'm sharing the information I've learned over the years. I just really like doing this stuff, so I've done it since I was really young. And I hope by sharing my information and what I've learned with you guys, maybe you learn a little as well, and hopefully I can help you to get some passive income and build wealth also. The main thing to stick with is save, save, save. I mean, really, that's the underlying of all of it. It doesn't matter if you invest in stocks or real estate or collectibles or whatever things you guys really like. I find if you just put money away for the future, you're really glad it's there when you need it. So let's get into the 5 stocks that I like. So the first one is hard to pronounce, so forgive me if I get it wrong. It's Virtus Infracap Preferred Stock. It's a U.S. preferred stock fund, and the ticker symbol is PFFA. Now, there's a couple things I like about it. One, it's not a REIT, it's preferred stock, and I am in the real estate business for the most part, so I like when my stock investments get into a different format or different things than just being in real estate as well. So by being in preferred stock, I feel like that balances out a bit. The other thing I really like about this fund is they pay monthly. It really makes no difference, but I like monthly checks. My bills are monthly. It kind of balances out that way. And they're paying over a 10% yield right now. Now, again, as I mentioned before, you know, dividends aren't always guaranteed. So if something goes wrong, that can be changed in terms of it. But I've had this stock a little while. It's done just fine. Every month I get my dividend, and I've been really happy with it. And now you're not going to have a whole lot of stock fluctuation. Hopefully it doesn't drop a whole bunch. It's dropped a little bit from, almost 19 and change down to 18, which has increased the yield a bit. And I think that's what creates some opportunity to get a bit better yield with it. And hopefully it doesn't go a whole lot lower, but it continues to pay the dividend in the meantime. I wouldn't expect a whole lot of upside in the stock either. So I'd either use those dividends to buy more of it or use it to offset bills or however you want to use them. But I like that it pays such a high dividend. It's one of the things in my portfolio. Also, as a side note, I don't only own these 5 stocks. These are just 5 stocks that have a nice big dividend to round out some of the things in my portfolio. So the next stock I'm going to talk about is also an exchange traded fund. It is the JP Morgan Equity Nasdaq Fund. JEPQ is the ticker symbol. A lot of people talk about JEPI or JEPI, which is I think it's the S&P one. This one's a Nasdaq one. What I like about it is it gets a little bit better of a return. Like PFFA, it also pays monthly, which I really enjoy, and it's getting about a 13.5% dividend right now. I think that's because it's using the Nasdaq stocks versus the S&P ones, which are a little bit more volatile than the S&P stocks. I like the higher return. I like that it pays monthly. I didn't put a ton in it just because so many people on YouTube talk about JEPI and JEPQ that it worries me when that many people are talking about a fund that there's too much interest and sometimes they're just overpriced. Again, I like both of them. I have a little in both. I like JEPQ a little bit better just because of the high dividend, and I like the dividend yields. I personally use this stuff to offset expenses in my life so that if work goes slow for some time, I try to build enough in these portfolios that the dividends can actually pay my bills. Um, Full disclosure, I'm not quite there yet, but I'm getting there, and I continue to invest in them because I don't have that far to go. And I'd love to be in that position of the passive income that everybody talks about. I think that's so nice to not worry about the other side of things. And then I can work primarily out of enjoyment. I enjoy what I do, but it'd be really nice not to worry about any of it and just simply then forgive me again, full disclosure. If anything ever happened to me, I know my family can just continue to live the way we do based on those dividends. And really, that's why I share. I hope that some of you can grow and be like that at some point because it eases a lot of stress. So the third stock I'm going to talk about is a tough one for me to decide on. I was going back and forth on two different stocks, and I went with Altria. Its ticker symbol is MO. They've fallen below $40, which has gotten them to almost a 10% yield. Controversial because it's a cigarette company and it's in a field that I know a lot of people don't like to be invested in. I try not to have an opinion about good company, bad company. I really do all my investments just based on investment and what I see in terms of making a return. What I found is in bad economies, cigarettes and alcohol tend to do well. People gravitate to it. So if we have a rough economy, despite that they might go lower, they also might go higher because their sales could go up. I'm not making a prediction either way. You guys have to make your own decisions on that. But what I've read based on history is the interesting thing is if there's rough economies, that alcohol sales and tobacco sales tend to go up. Now they have new competition with legalized marijuana and some other things. Like I really don't know how they'll perform, but I do think below $40 a share, if they're getting a 10% dividend, they actually raised their dividend at the last quarter. So I feel that they feel pretty strongly that they're able to make those payments, and that makes me feel more confident as well. So that's the third one I picked. As a side note, I was deciding between it and Stanley Black and Decker. The real reason that I stuck with Altria was when I looked at the last quarter's earnings of Stanley Black and Decker, despite that it really blew away what was expected, I noticed that the gains were also made from cost cutting measures. And while that's great, there's only so far that places can cut costs. So if the earnings are actually not growing because of more sales, and the real reason is they're able to cut costs, whether that's from reducing inventory, which is what I think it was for Stanley Black and Decker, or labor costs or whatever else, there's only so far that can go to increase your sales or your earnings, as opposed to actually growing your sales and doing better business. I still love Stanley Black and Decker. We can call that as a kind of number six in the group, but I didn't pick that one for this video. I'm sticking with my Altria pick. So my fourth pick, which is probably my second favorite one, maybe even my favorite just because I like how it's worked out so far, is NEP. It's kind of a sister company to NEE. It's Nextera Energy Partners. And Nextera Energy Nextera Energy Partners essentially sells wind and solar to Nextera Energy, and they also do gas pipelines. They've dropped from, I've mentioned it in a few other videos. They dropped from about 80 to 50 over time, and then they announced some bad news and dropped from like 50 to 20. Well, by the time it dropped from 50 to 20, they were paying over a 15% dividend. They just had their earnings. Their earnings confirmed exactly what they said, which is essentially that their growth rate of the dividend is not going to be as much as they expected it to be. So they were hoping it would be somewhere between 12 and 15% per annual increase in the dividend. And now they're more expecting it to be between 5 and 8% because the higher inflation has caused their borrowing to go up in terms of its costs, which is offsetting how much they can raise the dividend each year. But it was paying 15.5%. If it actually goes up anything from there, that's incredible to me. So as long as the information was accurate and there's not something else going on that has caused the stock to drop so far, I love getting 15% return. I pray that that's what they're able to do. And if they can actually increase that from 5 to 8%, I'm floored. So at the quarterly report, they did just fine. They actually raised it 1% and change, which would be in line of their 5 to 8% estimate. And the stock's gone up from like $21 or $22 a share. It traded up above 28. Now it's fallen off into the 27s on Friday when the market was correcting. If it falls back in 24 or 25, I actually might pick up some more. And I have a pretty big position for me already. I'm just hoping, again, that the information's accurate. I wouldn't follow my lead on this one and do too much just because I've taken a real gamble on it. But again, I love the dividend. I love what they're paying. And I think they're a decent company. I'm just hoping it's not bad information where it just gets worse. Sometimes when stocks go from 80 to 20, it just gets worse and worse and worse, but sometimes it doesn't. And my real goal with this company is that dividend. I'll never sell it if it just chugs along, because in time, even if the dividend rate is only 5 or 6%, which is more in line of what typical dividends are at places, and the stock price has gone up, as far as I'm concerned, I started picking it up around 15%, and I won't pay attention to what it's paying right then and there. So I love NEP, NextEra Energy Partners. I'd still be buying it up as long as the dividend's paying more than 10%, and just hoping that the news is correct and it continues to grow at a 5 to 8% per year. Now, they're talking about the dividend increase, and since I'm a dividend junkie, I love this stock. I like NextEra Energy as well, but it pays a lower dividend. And for those of you who aren't familiar with the company, essentially it's Florida's energy company. So check it out, see what you think. The last stock that I'm going to talk about on my list that I said was my favorite, but after talking about Nextera, maybe it's number two. But I like these two equally back and forth. So right now, I love Target. I really like Target. They're a good company. They have great earnings. Their price to earnings ratio is really low as far as I'm concerned. They're making over $7 a share the last 4 quarters, and they're only trading. They closed on Friday at like 107, or it might have even been a little bit below. I think anything under 115 looks great to me. Again, you guys do your own research. They're expected to make about $9 a share, which is incredible. I mean, what a great PE. They're paying $1.10 a share, which equates to about a 4%. So it's the lowest return on my picks, but I like it as a company. I think it's got real growth potential. They're paying a little over 4, almost 5% dividend right now. And if you want to take it to the next level a little bit, what I've actually done with some of the shares is I sold next November's $150 call, and I got another $3 a share. So when I've done the math, what I've realized is I've gotten essentially 8% return over the next year. The 4% and change from the dividend, another 3% from the call that I sold. And then if the stock goes up and I get taken on the stock, well, that's great return in a year on a stock. If I can buy it around $110 and sell it for $150 in a year, that's a great trade, and I'm not going to worry too much. On top of the fact, I didn't sell calls on all the shares that I have, so I'm perfectly comfortable that if the stock does what I hope and it's up to $200 in the next year or two, well, I still have some left. Part of what I like about the company is it's fallen rather quickly from 180 to 110. And some of the news that came out at the end that pushed it from 130 to 110 was they're closing up some stores that weren't profitable. Well, if you take a profitable company and you get rid of some stores that weren't profiting, their profits should do better. I understand that it looks not great that they're closing some stores, but I don't really see why that's a negative thing that impacts the stock poorly. To be perfectly honest, as they're closing the stores, in my opinion, the stock price should go up. Maybe it's not great in the media. Maybe people don't like to see that they're closing stores, but they were having too much theft. It was losing money. It sounds like they're cutting off the fat. I wish I could cut off some fat. So, really, I think it's a great move of Target to get rid of some non profitable stores. And that's only something that should help the stock. I'm excited for their earnings are coming out in like 2 or 3 weeks. I'm excited to see what they say. I'm almost hoping that they have good earnings with bad expectations for the future and the stock drops more so I can pick up more. Because what I'm noticing is the stocks are doing just fine, their earnings are doing well, but they're giving these forecasts that they don't expect to do well in the future. And people don't like that and they get nervous because the economy's scary. But then they beat the earnings and the stocks are doing okay. So if you're investing for the long term and not for a couple of weeks or a month, really these short term ups and downs shouldn't matter so much. The only problem is if you actually need the money. So my suggestion, don't listen to me, do your own research, is put in little enough that you don't worry about it and you leave it there for a long time. So Target's my last pick and probably my favorite of the group. Before I forget, which I mentioned in the beginning, do me a favor, give a thumbs up, like, subscribe. That's how YouTube's algorithm works. It helps others to find the information. And those of you who are enjoying the content, I really appreciate that help. I hope that the information I'm sharing, that you guys enjoy it. I hope that I'm not ultra boring. I know that I talk slow, so I'm trying to speed it up. I know that I'm a little dry, but it's all good, and I appreciate all the conversation back and forth. So enjoy your Sunday, and hope to talk to you guys soon.